Well, welcome everyone. This evening, it is my great pleasure to introduce Tara Vitale, from the managing partner of the Apex Law Group, and Coleman Scroggins, the associate attorney with the Apex Law Group here in Seattle, Washington, they're going to be talking about the Washington Nonprofit Corporations Act tonight and how it impacts our clubs in Washington state. So I'm thrilled you all are here, and I'll just go ahead and turn it right over to Tara and Coleman tonight. Thank you so much for being here.
Thank you for having us. Let me get my screen share going.
And I guess we should mention, if you have questions, please drop them into chat if you can. And then at the end, we will have time for Q&A as well.
All right, let's see if that gets us going. Awesome. Oh no. Okay. Technical difficulties here. On my other screen. Oh, here we go. Sorry, I had two screens going and it was presenting on the wrong one for you guys, at least on my end. Like Karen said, oh no. Sorry, I feel like I should know how to do Zoom by now, but sometimes it still gives some difficulties. Like Karen said, we're presenting on changes to the Nonprofit Corporation Act. My name is Sarah Vitale and Coleman Scroggins. We're attorneys at Apex Law Group, and we work with nonprofits here in the state of Washington. So we're just out there spreading the message about the new Nonprofit Act that went into effect January 1st, 2022. So, kind of like all legal presentations that you'll see, this is intended for educational purposes only. It is not, it is legal information and is not the same as actual legal advice. It doesn't create an attorney-client relationship, so everybody's situation is unique. So if you have specific questions, please consult an attorney to see how the law applies to you. To kind of start off, I like to always set some expectations about the goal. I guess it might be auto playing. Oh no. Okay, there we go. Is an overview of the new statute. We'll talk about some major changes at a very high level. And there are things that we think are major items for nonprofits out there. There may be certain items that we miss that might impact your specific organization. So, always kind of be aware of that. We're also specifically focusing on public charities, which I think touches you guys. So there's not too much problem there. And ultimately, our goal is to help you guys issue spot so you know when to talk to an attorney. Things we can't cover, we're not going to cover everything that's changed in this statute. It is a very long statute. I think when you print it, it's like 200 pages. And we can't talk about how it specifically impacts your organization. And we can't provide any legal advice, so it's only educational. So if you have any questions, again, please speak to an attorney. They are more than happy to help. I always like to start off my presentations to kind of talk about, what is a nonprofit? And then in the context of the new nonprofit statute, what is a charitable purpose? That language is used a lot throughout the statute. So to start with, a nonprofit is an entity formed under the Washington Nonprofit Act. That's usually where everybody ends or starts. It qualifies as a nonprofit for federal taxes and purposes, or it's a religious organization. So there's 3 items. Usually, if you're in the first, you're also in the second, and same with the third as well. For charitable purposes, it's, any items that you think about under that 501c3 bucket when you think typical nonprofit statute or nonprofit entities. It's, charitable relief for the poor, underprivileged, educational, really broad bucket. So I think you guys fall into that. So it's not going to be too hard for you to fit that bucket. You guys all have charitable purposes out there. And it's considered charitable under the IRS code. There's lots of different types of 501c3s. So it's not just 501c3s. I also like to go over the history of the new Nonprofit Act. The old one was, 30 years plus without any major updates. They updated, tweaked, along here and there along the way. But the new act really started to try to focus on aligning with the new Washington Business Corporation Act, helping to modernize. So, yay for virtual meetings and emails. And then also, a major goal of the drafters was to make it more accessible to the layperson. It's nice to have statutes, but if the normal person who's trying to actually, implement it can't read it, it's not really an effective statute. So the drafters really, really tried to focus on that. I always like to also, when I'm talking about the new act as a whole, try to give an outline of some major sections. As you see, there's a couple different options to talk about. We're going to focus on the ones in bold. Again, those are still really broad categories. So we won't get to every change that's in each of those sections, but we'll hit some of the major ones. Here's an even more detailed outline of the different articles of the new statute. You can kind of see where things align. You might have to go and look at different sections to kind of get your answers. But overall, this is kind of how the flow works. So it's a general reference guide for you if you ever need to look at the statute yourself, wondering where you should start. This kind of highlights some of the major sections in each of the overarching articles. And I will let Coleman talk about annual reports.
Thank you, Tara. Hello, everybody. We're starting off with annual reports because, well, they're quite important. This is something your organization should be or must be doing every year. And that goes for any entities, for profit or nonprofit. So what is an annual report? It's a yearly filing with the Secretary of State, where you disclose just some basic information about your organization. As you can see there, the registered agent information, your governors, that's your board of directors, your officers, your executive directors even, and then other general information, mailing and physical address, contact information, stuff like that. Newly added for the Nonprofit Corporation Act at the top of 2022 is organizations now have to disclose their major changes, which we'll cover in the next slide, and their employment identification numbers, which is your federal tax ID number. You should receive the notice for your annual reports 30 to 90 days before the due date. Those typically go to your registered agent, and you can file those anytime 120 days before the due date. I will add here, you won't see it written down on our slide, the Secretary of State has recently opened their new and improved online filing system. Some bugs are still being worked out. You can do online filings for this every year, but be warned for now, there may be a couple hiccups. We have the fee schedule down there, the online report filing fee, the $10, which is what the base fee used to be. Now they've added the online processing fee of $10. And if your organization has a gross revenue of more than $500,000, there's an additional $50 fee for the filing fee. Like I said, annual reports, if you're taking notes, the heading should be, what do we have to do every year? The annual report. I can't stress it enough. It's a really easy filing, but a lot of organizations tend to let it slide, and it can affect your standing with the Secretary of State. You could be in delinquent status. You may end up being administratively dissolved if you don't get it filed. So please go check your annual report filing. And next slide, please, Tara. Major changes. This is a recent addition by the Secretary of State. They're asking for organizations to report major changes. If you're taking notes on this slide, I'd say just copy the RCW up top there. We've put the statute here, but as you can see, it's a lot of legalese. We've highlighted some important words to sort of draw them out. But what I'm going to go ahead and do now is try to put this in layman's terms for you. So what are major changes? Why do you have to report this every year? When do you have to report this every year? Major changes are, well, there's two types under the Secretary of State's, you see there. article differences, and operational differences. A good rule of thumb we like to abide by is major changes are required to be reported to protect the donors. When donors give your organizations donations, they have sort of an implicit or maybe even an explicit expectation about where these funds go. What cause are they going to? Who are we fitting with our donations? So article differences. This is literally the written word of the organization. Any amendments to the article's purposes, that are substantially different. And I will note, lawyers love the term substantially different. It's really gray. It's sort of undecided. It's very fact and circumstances, because not every change to your articles is going to be a substantial difference. If you're just updating an address, that's probably not a substantial difference. If you're updating your purposes, it could be a substantial difference. And that's what takes me to the second one, operational differences. This isn't what you would write down in your articles. A lot of organizations they found under charitable purposes, such as we bring relief to the poor. Well, maybe for that organization, bringing relief to the poor is just passing out educational material to children, right? Underprivileged children. That would be something that's approved by the Secretary of State and the IRS. Later down the road, you want to bring relief to the poor by, say, opening up a soup kitchen. That could be a major change. Like I said, gray area. If you have any specific questions about some of the operational differences your organization undertakes and whether those arise to a substantial difference, it's one of those things, as Tara said, you may need to consult with an attorney. So one of the best examples we've been able to come up with for substantial differences is you see right there. It's a fairly narrow application of when you need to report. As the example says there, it's when a symphony starts an animal shelter. And to kind of bring this back around to what I said to start, our good rule of thumb here is think about the donors. If the donor is giving you funds and you start having different activities or carrying out different purposes than perhaps what they expect, it'd be important to close that information and let donors know you're doing something different. Next slide, please. Once again, this is the second part of that same statute. A lot of legalese here, a lot of terms we're highlighting, but if we can go to the next slide, I'll attempt to dissect this down into layman's terms. You don't have to report every major change. For instance, you don't have to report major changes if you're a religious organization, which Seroptimist societies typically are not. You don't have to report changes made within the first 3 years of your organization's operations, as long as you're consistent with some general purposes that are in your articles. Without knowing, I assume most of the societies that are here today are past that 3-year mark. So the one you would want to look out for is this number 3, this operational differences. And the best way I know how to describe this without getting into the legalese is if you start opening up what you're doing as an organization, start carrying on other activities that are maybe outside what you typically do, and those activities are paid through income or revenue or sales, or anything that's not donor funds, you do not have to report those changes. The donors' funds aren't going to that, so why would they care? You don't really need to disclose publicly the fact that there is a major change. So once again, rule of thumb for major changes, if it's anything you think a donor might care about, whether you're writing it down in your articles, whether you're opening up new programs, you do have to report that. If it's something that you're doing newly that you are not using donor funds for, then you fall under the exception and you do not have to report that major change. The one thing I'd like to stress with any of these major changes, we use terms like substantially different. If it comes down to it and you have questions, please, I cannot stress it enough, go contact an attorney. We're always happy to speak with you. But I'll leave it at that for now, and we'll go on to the next slide here. Charitable solicitations filing. You will also sometimes hear this called the charity registration. This is essentially just a disclosure to the Washington Secretary of State that you're operating as a charity, you're collecting funds. Not every organization is required to file a charitable solicitations filing. I will say that if you do it voluntarily, it does lend a certain amount of credibility to your organization. You're registered with the state, you're approved as a charity. That all looks really great to donors. To the left there, you see our flow chart, kind of some small text. The same flow chart is on the Secretary of State side. It's very handy, but just so I know you guys know it, there are certain situations where you would be required to have a charitable solicitations filing. And those situations are if the organization has any paid officers or employees. Are you hiring a commercial fundraiser to go out and solicit funds for you? Does the organization pay others to carry out any activities or organization? Or if you receive more than $50,000 in 1 year from the public? Those are the situations in which you would have to have a charitable solicitations filing. So what is this filing? I like to compare it to the annual report. Some basic information, address, officers, stuff like that, contact information. There is a little bit of a financial disclosure to it. You do have to report year-end funds that have come in and come out. They're general. You don't really have to get into the weeds with it. It's mainly just expenses and income as they're applied to your charitable purposes. And what we have here is the citation to the Washington Administrative Code. You do have to do this online. It's actually a pretty friendly form. I don't think the Secretary of State ever actually took this down from the online filing. I could be mistaken, but it should be back up and running. And then we have some of the fee schedules there. Like I said, not every organization has to do this, but if you do have to do it, or if you voluntarily do it, you do have to file the renewal every year, 11th month after the end of your fiscal year. Be sure to keep up with it. If you do decide to do it, there's not a lot of leeway to it. It's the day it's late, they cancel your charitable registration, and then you have to re-register, which is a little more expensive than if you stay on top of it and you redo it every year. But that's charitable solicitations filing in a nutshell. And I believe after this, I'm going to pass it back off to Tara.
Yeah, I'll talk a little bit about I'm skipping articles because since you guys have a national organization, there's probably pretty set articles that you guys have for founding. You guys have probably pretty similarly aligned purposes. But again, if you have concerns about it, go back, look at your articles as well. Where I really like to focus a lot of time is the bylaws, because those tend to be where local chapters tend to tweak and tailor some core internal documents that I think it's really important that, you kind of go back and reassess, each year, and especially under the new statute. A lot of what the new statute is going to say is here's a default unless your articles or bylaws say otherwise. So that's why I think it's really important to go back and just look over it, make sure you guys are actually, in line with what your governance documents say. As many of you may know, bylaws are inward-facing documents. They're not published to the public like your articles, and they address the rules and procedures for how the organization operates internally. How do you make decisions? Who makes decisions? What are the different roles? Especially under the new statute, you're going to want to look and, review if your notice provisions are up to date and in line with what you guys actually do. You'll kind of want to look over your record keeping system. These sometimes are in the bylaws. Sometimes organizations have separate record keeping policies and procedures. You'll kind of want to look over your inspection rights as well. Term limits have been adjusted under the new RCW as well, officer positions, and then there's also a lot of clarification around new membership sections and provisions that Coleman will speak about towards the end. for notices, sending and receiving them, basically, the definition is a notice is a form of a record, tangible or electronic. You can see kind of where the updates are, or if allowed by the articles or bylaws, comprehensible oral notice. So that's a new one that's been added. Make sure, if you want that, you have to put it in your articles or bylaws. Typically that goes in the bylaws. Some new kind of also default provisions, unless the articles of bylaws say otherwise, around when notices are technically received. So it's actually received, left at the recipient's residence or place of business, 5 days after putting in the mail, if posted correct addressed correctly, and then if you do certified mail, whatever it says on the certified return receipt. For members, it's a little bit different. 5 days, as long as it's to the address as shown on the nonprofit's current records. Coleman will talk about this, but it's really important to make sure you have a running list and a current list of who your members are and how to contact them. So address can mean multiple things, or two different things really. It can mean a physical address where you mail something, or it can also mean email address. We always advise try to have both wherever possible, just in case the email address has any bounce back. As you see in the next line, if an email is rejected twice, so it's wrong, it comes back, the mail account has been deleted, that authority to be able to send via email has been implicitly revoked, and so now you have to mail out a notice via snail mail. So that's why you always want to have both an email and an actual mailing address to go forward with. To talk a little bit about electronic transmission, so email is really where that's at nowadays. So unless your articles or bylaws say otherwise, their emails are technically received upon entering the electronic system and in a form capable of being processed by the system. Emails are really weird. They send in different formats, so that's why they have kind of the 2 steps. But really what this means is that it's received, the email notice is received, even if it goes to your spam. So really make sure that your members are aware of that they're checking their spam mail, and that the board and officers are as well. The other thing to think about as an organization is that sometimes those like MailChimp apps, those different types of mass email servers can sometimes land in people's spam box. So always let members know to keep an eye out for notices coming and to be aware of that as well. So yeah, sorry. Again, members can revoke the electronic transmission permission if it's undeliverable and the secretary or other person responsible for giving the notices is aware of that failure as well. So again, kind of a 2-step process, a little extra, but just be aware and watching out for those bounce backs from your board or usually with your members. Record keeping, things that you have to always keep. We like to call out all meeting minutes of the member meetings and of board meetings and committee meetings as well. All unanimous written consents by the members or the board, and then all actions taken on behalf of the corporation by a committee. So there's kind of things, member meetings, board meetings, and committee meetings, and the written unanimous consents that we can talk about a little bit later need to be kept in some form. Typically, most people keep it electronic nowadays, but it needs to be kept on record. I always like to think of these things as the memory of the organization, right? People will turn over, members will turn over, time lapses, and things get forgot. But when it's written down in meeting minutes and written consents or other forms of records, it just helps keep a track of what's happened in that organization. Other records you want to keep current are articles and amendments, anything that you have out there for your bylaws, articles, any forms of communications to the members. So if your organization says you have to post a yearly newsletter that includes financial statements, updates, things like that. Anything kind of keeping those members up to date on what's going on needs to be maintained, as well as addresses, again, of directors and officers. Annual reports, financial and accounting records have their own timeline. So again, look at your internal policies for record keeping. If you don't, you should come up with some sort of formal record keeping timeline and policies and procedures for your organization. For membership organizations, records of its members needs to be kept. Coleman will also talk about this, a list of who the members are, the class, the number, contact information, all of that needs to be maintained. And then again, a new update, modernization, it can be hard copy or electronic. A lot of people, I think their organizations are kind of straddled in between. If you have old hard copies, it's always great to put them on to the electronic server as well. If you want, you can get rid of the hard copy. Some organizations like to keep them. Again, look back at your record keeping policies and procedures for internally how you can, if you can get rid of those hard copies or not yet. To talk a little bit about the sections that have been updated around boards, board members and officers, the biggest change that we've seen is that now formally you need 3 or more directors required if you're a public charity. So typically that 501c3 status. If you're applying for the determination letter for tax exempt status, which Coleman mentioned, I think a lot of you guys are already well established, so you're out of that phase. Or there's some other reason that you might land in that IRS category for a public charity or a charitable organization. Typically in the past, it was an informal rule of the IRS that you needed 3 or more, but you didn't need it here at the state level. Now the RCW has gone ahead and updated and become in line with the IRS requirements for tax exempt status. It just helps organizations here get, one step ahead and, lower that possible rejection rate from the IRS. Another update, which I don't know typically applies, but it may, you guys can now have under 18, so minors serving on the board of directors. There's some restrictions around that. It's not as common, but it is starting to see a lot more organizations involving youth. So it's something that's out there to be aware of. And then for the officers, VPs are no longer required. It's great to have, but some organizations are on the smaller side or like to run lean and mean. So your positions that are required are president, secretary, and treasurer. And please be aware that the president and the secretary can't be the same person. I always like to think of that as the president, who's the person going out there, changing things up, doing the actions, and the secretary is recording the memory. So you don't want the person who's acting and the person who's recording the memory to be the same, just in case there's ever some type of misalignment. You always want that checks and balances between the two. Again, talking about board members and officers as well. The new laws and the new RCWs have set a default to 1 year unless your articles or bylaws provide otherwise. Some organizations have longer. They sometimes like to run on 2-year staggered terms. So just look back at your internal documents to make sure that they align or that somewhere it says something. Otherwise, your default is a year. They've also included a max as well for 5 years. But the nice thing is, yes, 5 years is a long time. And if you are trying to intend to have very long-term individuals, they can be reelected in successive terms. But again, you need that checks and balances at least every 5 years. The other big change that we've seen is in expired terms. A director serves until their successor is chosen. So even if they kind of fall off at that end of the year, they're still there for their fiduciaries. They're still responsible to make sure that successor comes in and replaces them. So again, look at your articles and bylaws, make sure you have provisions around how does a director or officer resign, or how do they how can you remove them? So, if someone leaves and they forget to resign and you've lost contact, you can at least go back through and formally remove them and cut that tie. Like, as the next point shows, that the RCW has also included default removal processes. A lot of articles and bylaws didn't have that in the past. So again, they were just trying to modernize and help set a default for when your articles are silent. Oh, oops. Here we go. Sorry about that. Further in the RCWs, things that have been updated and clarified. The new RCWs provide a lot of clarification around fiduciary duties. So those responsibilities of the directors and officers now. So your duties are to act in good faith, your duty of care, and the duty of loyalty. So duty of care is to act like an ordinary prudent person. So just basically an average everyday person that's well informed would make a decision in that similar circumstance. So at that time, in that place, the court's not going to look back with 20/20 vision and say, you should have done this because there was a different option better. They're going to look at what you knew at the time and would a normal ordinary person make the same decision. Duty of loyalty means you're putting your nonprofit's best interests at heart, right? You're not trying to pass any sweetheart deals to, your niece or nephew or whatever. You're always thinking about what is the best interests of our nonprofit at this moment. The new RCW now explicitly has that going for the officers as well, but they've also added a duty to convey information above. It hasn't always been clear when, if, but now it has been codified that yes, if an officer knows something that's going on and is suspicious, they need to run that up the pole and make sure that it gets dealt with. So that seems maybe scary for a lot of people to realize that they have a lot of extra duties that they may not have been fully aware of when they took the position, but don't panic yet. There are a lot of protections for the fiduciaries of the organization. Out of case law, the business judgment rule. So again, kind of what would a normal business person think with given the facts and circumstances at the time? They're not going to look back 20/20 on you and decide you should have picked something else because it turned out poorly or there could have been a better option. There's a Volunteer Protection Act here in Washington. And there's also the ability to rely on competent individuals or professionals that your organization is working with, right? You don't need to go out and get, a master's in accounting to be able to fill your fiduciary duties, that you looked and reviewed the books as the treasurer, right? You can rely on the CPA and the bookkeeper and the other professionals that you're working with to relay good information to you. You just need to have the duty to look at that information. Additionally, we always like to advise as you're updating the articles and bylaws, make sure you have limitations of liability and indemnification provisions. These help ensure that your board is well taken care of. And that's internally within your governance docs. Externally, you can look for directors and officers insurance. It's usually fairly small, fee to go with it. It brings a lot of comfort to the directors and officers to ensure that they have coverage if something were to ever occur. We also, if you're a 501c3, you check the box to the IRS that you already have a conflict of interest policy in place. But in case you don't, the RCW does have a default policy and procedure now. It's still best to go ahead and adopt your own internal formal one. You can look to the IRS. They have a great example of what they want that also works here in Washington. So just make sure you have that in place and you use it whenever there's a potential conflict of interest. Conflicts of interest are not prohibitive. They just take extra due diligence, and that policy helps to make sure that you do that. For board meetings, there are two categories that you should kind of think of. Regular board meetings. Typically no notice is required if it's scheduled, which is kind of an update. So you can, at the beginning of the year, post the schedule for the board meetings. It makes everybody happy to know that they don't need to send out, monthly notices, go through that whole process. You can do it all at once now. Or there's special meetings. So those meetings are focused on if something emergency comes up, you guys need to talk about something. The new RCWs have dropped the notice down to 48 hours, or as provided in your articles of bylaws. Most people go with 48 hours. It's enough time for people to kind of clear their schedule, but still short enough that if you need to make a quick decision, you guys can call the board together. The RCWs also now set a standard for who can call and who can give notice. So it's president, secretary, or 20% of the directors can give notice of an upcoming board meeting. So it's usually used around special meetings. I think I mentioned this earlier as well. Oral notice is now allowed unless your articles or bylaws prohibit it. Typically, most don't. But look for more language around if your notice provisions are really restrictive and say it only must be by mail, it only must be by email. That could maybe get you guys, if you're wanting to open it up to oral notice as well. Also, another update is that you no longer need written consent for email notices. Now that is just a default and allowed. So that kind of takes off a little bit of an admin burden on your all's end. Action without meeting by a unanimous written consent. I always like to talk about this form of a board. It's board meeting is the way to kind of say it, but it's a pre-written resolution that replaces a board meeting. So you have a decision coming up, everybody agrees on it. You know, you don't need to really formally meet in person to have a discussion. This is where you use the unanimous written consent. It allows the board to write out the resolutions that are being proposed and then to affirm them, and then everybody to consent. It's not effective until the last director signs, but you also should be aware that you have a ticking time clock that once the first director signs, you have 60 days to get everybody's signature. Not that that usually takes that long, but it's something to keep in the back of your mind. And the RCWs also address how do you use this tool when there's a conflict of interest. In the past, it was kind of a gray area where a lot of attorneys had different procedures, ways to cover it. But the new RCWs has an outline for how to address conflicts of interest while using a unanimous written consent. I always put the double star at the bottom. I get a lot of questions around email voting. So, you know, the president wants to send out a proposal, a resolution to the board, and they just want everybody to send back an email saying yay or nay, right? So the first board member says yay, the next person asks a question or proposes something slightly different, and then you get a bunch of yays right after that. So were those yays for the proposal, the new proposal, or were they for the original written resolution? I've seen a lot of disputes arise out of that just because it's unclear. So I really propose trying to use something like DocuSign, having people sign the bottom page and take a picture and send it back via email, just so it's a really clear record on what everybody is saying yes or no to. And then I think we're moving into the membership section, which will allow Coleman to take over again.
Hello again. Yes, membership provisions. Perhaps the biggest update to the new Nonprofit Act. We get a full revision to membership provisions. As Tara was mentioning earlier, it's things, you know, bringing it into the modern day, codifying some general nonprofit practices that were a little unclear. Though it's not written here, members for reference are anybody designated so by the organization who also get to vote on fundamental transactions, that's dissolution, amendments to the articles, stuff like that, or who vote for the board of directors. If you're formed before January 1st, they have to be in your articles or your bylaws, and in either of those documents, you can set out the rights. If it's after January 1st, 2022, you must state in the articles that you have members, and in the bylaws, you can set out the rights. The big flag with membership issues that we're raising for everybody this year is that there are some default and unchangeable membership rights in the new statute. Some of them cannot be modified by your articles or bylaws, particularly around membership rights to inspect documents. But generally, we're just saying, go look at your admission provisions, go look at your suspensions, how you're treating your members, how you're electing them, and compare them to the new statute and make sure that these default statute provisions aren't applying, and that what you're doing in practice for the organization is what one you're supposed to be doing, but maybe there's just small changes needed to get away from the statute and be able to do the things as you're doing them. Every organization is different, so you want to be sure that you're not falling into the default statute, especially if it goes against how you want to operate as an organization. Moving on to the next slide. Membership list. Tara mentioned this briefly earlier. Every organization with members has to keep a membership list with the members by alphabetical by name, class of the member, and if there are different classes, and the number of votes each member is entitled to cast. These lists have to be available for inspection by other members, with the catch that members can inspect this membership list if it's for membership purposes. The other restriction here that we're seeing codified in law is that you cannot sell these membership lists. They can't be used for solicitation or commercial purposes, or just sold out there. And this sort of like brings Washington state law closer to IRS regulation. A membership list is an asset. When you boil it down, it can be a very beneficial asset. So if you're selling these off to for-profits, or you're allowing access to them for certain reasons, there's a chance you may be endangering the charitable nature of the organization. It's an asset. What you do with it as a charity matters. Moving on to the record date here. Record date is something that you'll also see in just general for-profit corporate law. It's just a date set that cuts off the point, it sets a cutoff point for which members are and are not entitled to vote on a matter. The great news about the new act is you don't need record date in your articles or your bylaws. The board can set it for each individual matter the membership is voting on. You'll see the qualifications there at the bottom. You can't set it any earlier than 70 days before the vote on the matter. And if you do set a record date, you have to include it in the notice. But administratively, a record date is very helpful. By setting that date, you know definitively which members receive notice and which members do not, if they come in after the record date. Also, for any members that happen to, pay their dues and come on board after the record date, it keeps them from voting on matters that they may not have a full gamut of information to. It prevents them from voting on matters that they just, quite frankly, know nothing about. The record date is useful. So, like I said, doesn't have to be in the articles. The board can set it for each individual matter. By way of example, if at the beginning of the year you're voting on directors, you can set a record date for that. And then months and months later, you're voting on a different issue. That can also have a separate record date. Going on to the next provision. Meetings. Much like the board of directors, members have to hold at least an annual meeting every year. New addition we see this year is that even just one member, if the organization has not had a membership meeting for 18 months, they can go petition the court to essentially force the organization membership to get together and have the meeting. It's just a way to ensure the organization is doing what it needs to do to operate. Members are making those decisions to keep things running. Remote meetings. This is something that if you do not have it in your bylaws, I do strongly encourage it. It's the easiest way to get members together. You'll see remote meetings, maybe something along the lines of telephonic meetings or electronic meetings. What all that means is just any method by which all the members can hear and speak to each other. As Tara was mentioning earlier, same as the board of directors, same for the members. You got to get notice of these meetings. The flag I like to raise here for organizations is that notice processes can vary depending on the type of meeting or what you're voting on. There may be some conflict between your bylaws and what may be provided by state law. So go look at those, make sure you're either abiding by the state law, or if you can change it, you're changing it appropriately. And one of the last things I want to touch on for membership is voting. The unanimous written consent that Tara was speaking of for the board of directors is also available from members. That administrative tool, everybody else on the same page. We just need your thumbs up that we can go ahead and do this. That's great. Typical cautions for email voting. But I do want to draw a very clear distinction between email consents for unanimous written consents and ballot voting. This has been quite a sticky issue this year with more than one organization. Ballot voting is much different than email consents for unanimous written consent. For ballot voting, there are very specific requirements that you need to abide by. What you provide in the notice, what you say in the notice. When you're collecting these ballots from your members that have these votes on it, how have they voted? How do you count the votes? This is the growing area of conflict among some of our organizations. So I do want to draw that distinction because there has been some confusion for that. Email consents for unanimous written memberships are allowed, as well as ballot votings, but there is a difference. Once again, I know you'll probably hear this a couple more times. If there's any questions about ballot votings or email consents, go speak to an attorney. And I'll hand this next part back off to Tara.
All right, can you hear me?
Sure can.
Okay, great. Sorry, I was on mute there for a second, trying to get it off. All right, I will wrap up the presentation talking a little bit about gifts. Under the new RCWs, there have been updates and some clarification around what is a gift and then what restrictions can be placed on gifts as well. From what I've been told, because I'm not a CPA or bookkeeper, the new RCW is more aligned with bookkeeping and accounting standards and practices, which, really helps when your governance and the bookkeeping and accounting side align more easily. A lot of the changes were to protect donors and donor expectations. So I think you've kind of heard us throughout the time talk about, would a donor be mad if they donated expecting money to go to X and it went to Y? Is always kind of that self-reflective question when I talk to clients about when they're making decisions or concerned about money being gifted to them, is to consider what the donor expected and, would they be upset if you change that use in any way? So, things to think about is, again, around solicitation, gift instrument examples, we'll talk a little bit about, but a lot of the changes are now that you can be soliciting a gift that actually is a gift instrument through your actions. So think about requests for donations for your specific programs and anyone directly responding to it within the year of the solicitation. So we want to build a schoolhouse. That is a opening for a restricted gift or a gift instrument that may have, again, donor expectations for the money to be used one way that you can't then pivot and use the money in a different way. So look at your flyers, your presentations at fundraising events, scripts, even oral statements can be now seen as gift instruments. So just being aware of those things as you're drafting flyers, you're making announcements, when you're trying to raise money, try not to put so many restrictions on yourself. If you do end up with a restriction, there are new RCWs around that. Again, I think Karen has our slideshow. She might be sending it out to you guys. So I've included the RCW site here talking about restricted gifts. So similarly, here's the legalese, but what do you do with that in real life? If you do believe that you have a restricted gift and you're worried about how you're using it or what your parameters are, again, talk to an attorney. see what those parameters are. You don't want to go outside of them, and ask questions, right? It doesn't hurt to ask questions ahead of time. The default rule is a gift given without restriction transfers complete ownership, right? I give you this, I have no expectations. You didn't really ask for it for any specific purpose. There was no solicitation. That is an amount of money or a gift that can be used in any way the organization sees fit. A gift becomes restricted when there is a gift instrument, kind of like I talked about before. Are your flyers setting expectations that the money that's being gifted is going to be used in a certain way? Are you giving oral statements? Things like that. So they can be modified if you do end up with a restricted gift. You're not locked in forever. But it does get hard along the way if things get distant. So if you have a restricted gift and you need a pivot or anything like that, go back to the donor, right? Especially if it's a large gift and the one donor. Go back, see if you can get their consent to pivot or to use maybe the money outside of the anticipated scope when they gifted it. Otherwise, you'll have to reach out to the AG, your nonprofit, and then whoever was benefiting from that gift that's an interested party can get together and come up with an agreement. Again, that's 3 people you're trying to negotiate with. So hopefully you can avoid that by going back to the donor. Alternatively, you can get a court order, again, expensive, and just a battle to get. Or if somehow the restriction is unlawful, wasteful, and the money's just sitting somewhere not being used, you can pull in the AG by giving them notice and a pitch of why you think you should be able to use it different and see if you can get their approval. So the main takeaway out of the new updates is just be really aware of your marketing tools, be really aware of what you're saying when you're asking for donations and gifts, that you're not unexpectedly setting some type of restriction on yourself. I always like to include a resources page. We really love Nonprofit Association of Washington, NAWA. They have awesome presentations, they have awesome clinics, awesome resources on their website. They serve statewide. Communities Rise is a more local Seattle organization, still capacity building for nonprofits. Again, lots of clinics, presentations. They also have great template documents on their website. So if you're missing that conflict of interest policy, if you need some extra language for bylaws or articles that you're kind of playing around with updating, they have great examples on their website. The other one from the Washington Secretary of State is the Washington Nonprofit Handbook. I have that it's being updated. It has been updated now that we're a year in, but it's a great resource. You should download the PDF, print it out, keep it on your desk if you can. Great guidance for nonprofit leaders and volunteers on how to operate a nonprofit here in Washington. There's our contact.
Thank you so much.